All right, just got started. Good afternoon, everyone. This is Brian Wilson with Market Structure Edge. February 26th. Really good to see everyone. I'm so thankful that you're here today. Just a couple of ground rules as we walk through things today. All questions are welcome. I will do my best to answer them. You can either put them in the chat or you can raise your hand. We'll try to keep this to about 30 minutes or so, but if we have questions and we want to go a little bit longer, that's fine. Uh, Actually, this is I don't know if you remember 2 weeks ago, I was leading this meeting and I was hacking my way through. I found out a couple of days later I actually had COVID. I didn't even know it was still going around and still kind of getting over that. It surprisingly takes a little while. Well, I will. I'll go ahead and get started. And once again, if you don't mind just keeping yourself muted, I've got a few topics to cover, and please, your questions are welcome. I'm going to start by sharing my screen so I don't forget to do that. Hi, Candace. Good to see you. Go over to NVIDIA, which was the topic during yesterday's note. And we'll take it back 6 months. Is this a perfect tool going into earnings? No, nothing's perfect, but it does give you a pretty good idea of what to expect. So this was the earnings time frame right around in here back in November. Nvidia had reached its previous highs, not surprisingly, as sentiment was making its way towards 10. And just as a reminder, that's our demand algorithm here in green. Well, sentiment took a very rapid downturn right ahead of earnings and was fully washed out at 1 out of 10. And in fact, it stayed at 1 out of 10. I want to say for about 30 days. It was a very long time, not about 2 weeks. But it got fully washed out, 1 out of 10, with earnings itself right around in here. It did absolutely nothing. Not really surprising, right? If we fast forward and look at the setup going into this earnings print, it was better. It was not washed out at 1 out of 10, but it had been declining. Would I rather buy something that's increasing in terms of sentiment or something that's decreasing? Well, of course, I'd rather buy something that's increasing. If I can buy something that's 10 out of 10, that's really good. Notice what was happening at the same time. Sentiment moving lower, short volume moving higher. That's a state of what we call convergence. It generally means that, it generally supports lower equity prices, not higher equity prices. And overnight, it was kind of treading water, which I thought it would do when I talked about it yesterday, and today it's down 5%. Did I think it was going to move lower by 5%? No. But if you look at the setup, it's not as great as if you were reporting here with sentiment, 10 out of 10. So this does provide some signals coming into earnings, and it's important, when we're talking about big companies like Nvidia that are going to potentially move the market. What's that setup going into the earnings print? This morning I talked about short volume in the note, and this is what I was seeing and you can see this pretty much anywhere you look. Look at my all equity portfolio, look at short volume moving higher. Dow Jones, short volume moving higher. It's going to become a pretty familiar refrain here. Large cap, short volume moving higher. Magnificent Seven, short volume moving higher. You start to get the picture. Mid cap, short volume moving higher. It's pretty much everywhere. And a couple of the sectors are really, really pronounced. Look at healthcare, moving from 50% up to about 60%. Look at the industrials, same type of look. So short volume has just absolutely exploded higher during the last week or so. And really, when I was looking at it this morning, my closest comparison was the one that was right in front of my eyes. This one going back to December and January. So as short volume moved higher here, and that was a 5% move higher in December and January. It did help to lift equity prices by about 3%. As soon as and remember, with short volume, we're talking about the use of borrowed shares. So sometimes shares will be borrowed because of demand in the marketplace. And I think that's what was occurring here. We had some demand. You can see the broad market moving higher. As soon as we kind of ran out of that short volume juice, what ended up happening? Well, shorts got covered at lower prices, and you can see it right here. It ended up taking the SPY down. So short covering ended up taking the market lower. Um, I think something similar probably plays out here, where we've seen a little bit of pressure today. How much further, will short volume move higher before it starts to move lower? But that's the potential. To me, is shorts getting covered at lower prices and potentially uh, putting some pressure, to the broad market itself. Let me stop for a second, see if any questions have come in. Yeah, Brad's got a great question. Can you show us one or two examples of divergence that you're looking for when making a trade decision? You referred to having difficulty finding divergences in your note this morning. Yes, I'm having tremendous difficulty finding divergences, and I showed you part of that with some of the looks. Good place to find divergence is just to go to either the daily trading ideas or momentum here. And we'll look at a couple of these. It's not always a perfect look, but let's take a peek here. Let me look at this a different way. I prefer this angle. So what you're looking for in terms of divergence, you're looking for strong sentiment, and you can see that here in CDE. Sentiment is 10 out of 10. You obviously cannot get any higher. And you're looking for short volume that is moving lower. So in other words, shorts are getting covered at higher prices. And you can see that short volume trend moving lower over time. What does that do then? Well, there's not as much supply of CDE out in the marketplace. And as demand stays steady or increases, it runs into limited supply, and it has a tendency then to take share price higher. So that would be an example, CDE. Let's see if we can find perhaps one other one. I don't know if Corning is or not. We'll take a peek. Okay, Corning actually is. You look at the setup for Corning right now, it's been hitting 10 out of 10 for a long time though, right? You can see it's been 10 out of 10 for a whole month. And it goes to show, and sometimes, it's part of our model portfolio concept is, yes, you can get those 2-3% gains, 1 to 5 days, or sometimes you can just hold on to positions if it's a good setup. If you look at Corning, it was 10 out of 10 on 123. Price was $93. And if you had a setup where, hey, as long as it doesn't go back down to neutral, I'm going to hang on to it, or something like that. You can set up different rules. Look at what you could have potentially done here. You're buying it at 93 and you're still holding on to it, and that's up at 160. That's the crazy type of appreciation that you can have sometimes. And you can look at this recent run where it stayed at 10 out of 10, and even at those higher levels, you can see those shorts getting covered. So this right here, that short covering is very, very different than this, right? You can see the difference between the two there. But great question, Brad. Let me paint in kind of broad brushstrokes here for just a moment, and then I'll circle back and see if there's other questions. What I wanted to showcase is something that we talked about towards the towards the end of last year. And I wonder if we're starting to get into this a little bit now. And here's what I'm referencing. Normal demand cycles in the market. You can see how it waxes and wanes over time. What do we start to notice towards the end of the year? And we talked about this repeatedly, but you can see demand, it's not getting up to the red line. The red line represents, I call it stretched conditions. The whole market's just getting a little bit stretched, but it's a normal rhythm in the market. I'll take this back a little bit further to show you this normal rhythm. You can see it there. It almost looks like a heartbeat, just up and down and up and down and up and down. But as we got into the latter part of last year, you could see that demand really started to weaken. And that made me wonder, what are we going to see at the beginning of the year? And because of this weak demand in the background, I've not been very aggressive in terms of my broad market positioning. I just didn't see strong demand. We had one upcycle earlier in the year, but you can see those demand cycles are already starting to weaken as well. And I think part of the look that we're seeing is the fact, let me go back to sharing. Sorry about that. Come here. I stopped my sharing for a second. It's taking a lot of effort to get any type of gains right now. So you can see the effort from a short volume perspective, all that borrowing, to lift the markets. What was that? About 3%. Look at all of this borrowing to lift the markets by before today by about 1.5%. So it's taking a lot of effort, a lot of exertion for the market to move forward right now. And if we look at what's happening behind the scenes, you could call this a good thing or a bad thing. It depends how you want to label it. But if you look at year-to-date trading, the rally has spread out, right? So if you're, if you're playing sector trades and you're in the energy or materials or consumer staples, industrials, you're very, very happy. I have some investor relations clients that they're in these sectors and they're performing just unbelievable so far during the first 2 months of the year. But obviously, if big tech is not participating, technology down 1.7, consumer discretionary, consumer communication services down, financials really weak. These are the larger sectors. If your larger sectors are performing poorly, that's going to mean the S&P 500 in a weighted index is not going to perform as well. These are much smaller pieces of the pie, if that makes sense. So let me stop for a second, see if any other questions have come in. Candace had a question, would I have sold when the supply crossed above the dotted line for Corning? Great question. Let's go back to that example, take a peek at that. So going back to the Corning example, the question is, when do you want to sell? And it depends what you're comfortable with. Yes, it's moved above the dotted line. Short volume is moving higher, but also recognize sometimes the reason that short volume is moving higher. It represents borrowed shares, and Corning is 10 out of 10 here. Can I live with short volume moving higher for a little bit of time? Sure. Kind of watch what's happening from a pricing perspective, and you can see it in trading volume as well. If Corning is getting good demand, sometimes that means that shares are being borrowed to facilitate that demand. That's what the market makers are having to do. And in this case, I think it was strong demand that was forcing the borrowing of shares. And as long as none of these other dynamics had changed, I'd probably be willing to hold on to that one. And you can see that the short volume trend then did move lower, and then share price appreciation even stretched higher from that point going forward. But terrific question, Candace. Thank you. Let's see. Let me take a peek. I'll show you what's been happening in SPY. Um, and I'll share what part of what I watch on a daily basis. So on the and you can see this is for the financials, but on the modern IR side, investor relations, we have sector looks. We have all kinds of different looks we can look at. But one of them that we look at is what's happening recently in the S&P 500. This is a daily look. That's that huge move higher from a short volume perspective. Very, very difficult to post gains when short volume is moving higher to that extent. And also what we can track on a daily basis is the movement in these, either in the underlying stocks or on the ETF side. And notice what's been happening, and I'll show you behind the scenes here in a moment. This was yesterday's trading. So as we went higher by about 6 points on the SPY, it was a tremendous move higher in passive money, and those are big moves as well. Remember, we're talking about the S&P 500. These are big, big moves. And look at what's been going on behind the scenes. So these are moves higher. We're looking at the SPY, and I keep track of the behaviors. So on a daily basis, that was a passive investment move. That was a 21% change in terms of what passive money was doing. They don't do anything the next day, the machines take over. The next day, passive money is back along with active money, 38, 34% changes, 21% changes, 21, 18, 25, 39. There's just a huge sloshing back and forth behind the scenes. I think trying to keep volatility at bay, but those are big, big moves. Now, it has reduced volatility. In fact, if we look at the SPY, recently we were up, I think this was like 1.4 or something like that. Here's the intraday volatility on a 5-day basis. Here it is on a 200-day basis. So on the ETF side of things, volatility is kind of evened out a little bit. You can see the effort it took behind the scenes for it to do so. But look at the S&P 500. We're still tracking a good amount of volatility there. We're still 50 basis points higher than that 200-day levels. But sometimes behind the scenes, the market makers, the counterparties, they're undergoing a lot of effort that none of us ever see. But when we track the data, we can actually see what is occurring there. Let me show you one other thing that's happening with SPY. And this is just a general trend. But SPY short volume is starting to increase a little bit, and we'll take this look back. We'll look at it for 6 months and see if that paints what I'm hoping to see. So look at some of this is short volume for SPY up above 60%. Look at some of the recent times when short volume has been higher there. There's a short volume high back at the end of the year. What happened to the market afterwards? Went down a little bit. What happened here? Short volume high, market went down a little bit. What happened here? Market went down. What happened here? Market actually went a little higher. It's not 100% read, but you can see in general terms over the last 6 months, when SPY short volume is higher, usually what's going to happen next? Usually it's going to bring lower prices. So that's kind of the environment that we are in at this particular time. I showed you earlier some of those, let's call them states of convergence, and I'll kind of walk you through those again because it's kind of eye-opening. Here's small cap short volume just exploding higher. And remember, we're talking about the use of borrowed shares, so there's extra supply out in the marketplace right now. It makes appreciation difficult. Look at big tech. The explosion higher in big tech, communication services moving higher, Bitcoin moving higher. It's the same general trend almost anywhere you look. Consumer discretionary, there's that spike higher. Consumer staples spike higher. I think you begin to see consumer staples spike higher. Energy spiking higher. So almost everywhere you're seeing that short volume move that's moving higher at this particular time. We are coming up on a month-to-month transition. And with these short volumes high, it could be a little bit tricky. If we look at recent month-to-month transitions, they haven't really been that smooth. Let's look at a few of these. In October, sorry, right here, October, market went lower afterwards. September market actually went a little higher. We look at November, market moves lower. We look at December, market moves a little higher. We look at uh, January, market moves a little bit lower. So it's kind of hitting it about 50% of the time. Why am I pointing out the month to month transition? Because historically, during a new month, we call it a new month, new money trade. Think of asset allocators in the market. Think of 403 401k, 403b contributions, just money that at a defined time is going to be coming into the market. And the beginning of a new month is a good time to do so. Has it been working recently? Well, it's been hit or miss about 50% of the time. So that is what we're coming up against here in the next couple of days. Next week will be the new month. And once again, as we're coming up into this time frame, here's what's facing us. Short volumes that are high, and they haven't been this high since December and January. And we know what happened when it reached a short volume peak earlier that then led to lower prices. So that's part of what I'm tracking in the market at this particular time. Question from MH. How meaningful is 0 days to expiration? What is the impact on supply and demand from a market structure edge perspective? 0 days to expiration, very, very meaningful, having a tremendous impact on equity pricing. And MH, I think part of what is occurring with those 0 days to expirations is I think it's leading to some of the choppiness that we're seeing in the market. And you can see this choppiness being displayed, especially during expirations activity. So these green dots, options expirations, look at the inflection point when we come to expirations. Lower into expirations, higher afterwards, lower into expirations, higher afterwards, lower into expirations, higher afterwards. But you can see those trends playing out. It leads to a lot of hedging in the market. It leads to a lot of choppiness, and a lot of the dips are just end up getting bought. And I think those 0 days to expirations strategies are playing into part of what we're tracking across the market. I'm going to stop my screen share for a second. I wanted to see if I had something open. I don't, so I won't go there right now. But let me see if I have any other questions. OIH, Oil Services ETF, it's been on an absolute tear higher recently. This is a question from Brad. Is it too late to enter? So let's take a peek at that. So Oil Services ETF. And I'll try to get to my screen share without destroying the top of my screen. All right, so OIH, and looking at that on 15% higher during the last month. To your point, Brad, about being on a tear, 60% appreciation. That's a pretty good tear. If we look then at, and you can have specific portfolios that you then set up, but we'll just look at energy then as an example. What's the odds that it might slow down? Is it too late to buy? A couple different ways to look at this. You can look at it for the sector as a whole, and 124 companies in the energy sector. what I will sometimes do is I'll take the largest ones and I'll by market cap and I'll just take those out. So sometimes the big ones will move a little bit faster. It's easier to get a read on 10 companies than it is on 124. Things are going to kind of even out when you have that many companies. But if we look at the general conditions here, well, we have energy that is 7.2. I mean, that's still really, really strong, right? If we think about the broad market, anything above 6 equals stretched conditions. Um, you know, very, very strong. Um, where would I prefer to be buying? Well, I would prefer to be buying when I have strong sentiment and I have short volume that's being covered. That would be my preference. This is fine. It's just not as good as it was back in the early part of February, if that makes sense. So from a demand and supply perspective, I would be more of a buyer through here than I would here. I might still nibble at these levels, but you can see that, short volumes have been moving higher in the space. See if there's any other questions. I think that takes care of the questions that I see. Let me once again kind of go walk through what I'm seeing from a kind of a look ahead. And if there's no other questions, we'll just, keep it to a little bit shorter meeting today. So as we look ahead, recognize that we're at a month-to-month transition. We're coming up on that, similar to here when we got at the end of January. What that means tomorrow is we're going to have the end of month indexes that those options will expire. A lot of times that means greater movement from a passive investment perspective. We'll then be moving into a new month, new money trade. Sometimes works, about 50% of the time recently. And all of this is being set against a backdrop of high short volumes.
Okay.
I see a little bit of risk here over the next few days as we make this monthly transition in a high short volume environment. So that's kind of what I'm seeing
Another round of food before I go.
At this
Sure.
particular time.
Dennis sure acted like he's hungry.
Second, see if I can find. Okay, looks like it got muted. Any other questions that I can address for anyone? If not, I'll go ahead and stop the recording.